Should I consider bottom fishing on companies after poor earnings slash guidance or like a bad event? So like Tesla this week or
Mhm.
CloudStrike over the weekend.
Yeah.
Um, are these like are these opportunities to kind of dip by?
There are opportunities, certainly. I mean, you look back, I remember, thinking about some of the ones that happened not too long ago, like Netflix was really falling apart and having some bad earnings reports. And, they bottomed out in what, 22 or so. And man, it's up so much, 400% since
Yeah.
that bottom. We saw Meta, I remember Meta had a 40% down day after a bad earnings report.
Hmm.
I remember when he was talking about the metaverse a lot, and
Yeah.
boy, the
People did
market
not
did
like
not
that.
like that at all, right? And so obviously that's had a huge run from that standpoint too. So there's some validity to it. Here's how I would look at it. First of all, um, I would probably only be one of the really big companies that I feel. I mean, even look back in the history of Apple, right? They really struggled. They got to a point where they had to borrow money from Microsoft to basically pay the bills. But they were still a big company with a big brand, and they were able to turn that around. So if you kind of were buying on that downturn and that bad news, you made some good money. GE though is a cautionary tale because this is a big company, well, one of the original Dow components from the 1880s, right? Super high quality company. That's had bad earnings, but they just continued, right? So that's the problem. Does Tesla continue like a GE, and now you're kind of buying a falling, trying to catch a falling knife?
Yeah. Are you gonna cut yourself or you're gonna catch the handle?
That's right. Or is it like these other ones where there's a big turnaround? So I don't really do these type of dip buying personally, just because you know I like momentum. I like to see the results happening and jump on that wave. And I think there's more potential for hitting more singles and doubles in momentum investing than there is, in this dip buying. You get more home runs,
Yeah.
but you can strike out a lot more often too. So that yes, but would you buy Tesla now based on what's going on?
For me, I don't personally like single stock dip
Yeah,
buying.
yeah,
I like when it's kind of an industry or kind
hmm
of a sector.
yeah,
So you could think about the pandemic with cruise ships or airplane travel, right?
right, yeah,
So yeah, they lost a lot of their business, but they were kind of bailed out. And then also, people are going to travel again using airlines, so
hmm
eventually they have to come back. There
right,
wasn't any kind of thing that was going to stop them in the long term. Or you could
right,
talk about regional banks last year during the Silicon Valley um, bankruptcy, how a few regional banks failed, but as a sector, a lot of the banks are still sturdy, and so you could get that at a discount. So you could kind of think about industries. I prefer that because maybe you're not going to hit that home run, but you could get like a double or a triple, maybe a little bit
hmm
more return
yeah.
than like just doing the singles.
Yeah, so basically what Easton's saying is that, using an exchange traded fund, you go out and buy all the regional banks, or, most of them. Or you go out and buy, the cruise ships, all of them in one. What's the airline one? Jets,
Jets, yeah, yeah.
Jets. You can buy the airlines through an ETF. The reason we do this, okay? If you're right on an individual stock, you'd make the most money, and so that really appeals to a lot of people. But there's an awful lot of people out there that have underperforming portfolios because they've got really concentrated maybe into 10 or 20 stocks. And, enough of them are doing poorly to kind of really offset things. But the analysis to be right at that level is so much harder. You move up a level and say, okay, just look at the industry,
Yeah.
right? So, hey, people are going to fly again. Let's buy that industry, and maybe it continues to do poorly for a while. But if I wait long enough, I'm gonna probably make some great money. Regional banks, they still are needed. They're not all going out of business. Matter of fact, they might get bailed out, which they were in a way,
Yeah.
right? Sort of. And so, again, and that's going to come back as a group, right? You can go up one more level and actually look at, hey, it's the U.S. versus the other large countries versus emerging markets, right? And so which one do the US, that's where the momentum is. And so you kind of, okay. And then so I'm saying, so you can go up higher and higher, and it's easier and easier to be correct.
Yeah, but you lose that kind of high end potential, but
Yes,
your bottom end, your
right,
your risk is much lower.
right. Yeah, I look at it, trying to beat the market. I don't want to beat the market, by 10% because that probably means I'm going to lose by 10% enough times to make that a real problem. And so you really want, if I can beat the market by a couple percent, I can hit a lot of singles and doubles. That's just, it's just, this is just from experience. I've been doing this my whole life, and I used to go after the home runs, and I've done all that stuff, and I've hit a few, but I've had enough strikeouts. And we're managing other people's money, so I'd rather be more conservative, working higher up in that realm, and so our targets we're looking at the more concentrated areas like a regional bank or what have you, right? And then our core pieces are these large pieces where we'll either be international or US or both, or large cap or all the caps. We have
Hmm.
some variance we do in our core, but pretty well diversified in the core altogether, just because you never know where the money's going to go. So
Yeah, if you're gonna do any kind of dip buying, always keep your position small. Understand that you're risking a lot when you're buying individual stocks, and so you should be cognizant of your risk.
yeah, if you're right on a dip buy, it doesn't take a lot of money to become a lot of money. So you don't need to put massive money in those things just in case you catch the knife blade instead of the handle.
Yeah.
And so, that's a good point too. So